Welcome to Dental Unscripted. Where Mike Dinsio and Paula Quinn break down the practice ownership journey, one episode at a time. Starting up, buying, and running a successful dental practice.
All right, guys. Welcome to another amazing and fabulous podcast by Dental Unscripted. You have Paula and Michael, as always, your infamous and famous hosts. I don't know what you want to call us, but we are your hosts. And today we've got a great topic, as always. We are going to talk all things building wealth, not just revenue. I find that a lot of clients out there, a lot of you doctors, chase this idea of revenue and they forget about the wealth part. And, you know, my mom taught me, and I'll give it to my mom, not my dad, taught me early on that you have to pay yourself first if you want to have some money in the end. And I think you guys need to figure that out. And so today we've got a great person and owner of his company. And I think he's going to be a wealth of knowledge. Omar, welcome to the program. I would love for you to introduce yourself, your company, how you got where you are. We usually lose them in 7 minutes, so don't go crazy. But tell us about you, and we'll get cracking here.
Thank you, Michael. Super excited to be here. So, about my background is I'm a CPA by profession, but I'm an entrepreneur by nature. So how I got here goes back to when I was 14. I started my first business when I was 14. And while I was in middle school / high school, and scaled that till I was in college. I exited that business when I was 21, finished up my degree, got my accounting degree, went to corporate America, 7 years, didn't really enjoy it. Fast forward, got married, and pitched the idea to my wife, like, hey, start a CPA firm. And one of my close friends is a dentist, and so we just started working with dentists, 14 years ago almost now. And today, Bridge Consulting works with over about 500 or 600 dentists across the nation. And we have a great team, and we have a mission to help dentists have financial clarity and have a great financial future by using their practice to build wealth, which is ironically why we're here.
Yeah, I love that, dude. Thank you. I'm not joking you. Paul and I just got off the phone with one of our CPA / bookkeepers, and we just learned something today after all these years. So your role to business owners is so important. You have to be accessible. Even me with an MBA, I don't understand accounting. It's like a freaking foreign language, even to an MBA. So that sums up the confusion of accounting and bookkeeping and what the freaking IRS is and is not going to do. So you guys are just so important, and we appreciate your works, and knowing that you have trusted 600 clients, dentists under your belt right now and growing. You are the person to talk to. So welcome to the program. I'm going to kick us off because it's something that I go through with our clients, and I'm just imagining, we don't have all the dentists in the world under our portfolio, right? So we just help the clients we help. And I help them with this all the time because they don't understand it. Luckily, I did have an MBA and I could explain some of this stuff, but they don't even understand how to read a P&L, let alone if the P&L is set up correctly. Half the time I'm looking at the P&L saying, who is doing your bookkeeping? Because I don't even understand this. And I look at this stuff literally every single day. So step one, clean up your P&L. But let's just assume the P&L is clean. There's a huge disconnect to how much money did I make this month to what the P&L says and what is the actual went into the bank account. And so I'd like to just start there, because if you are trying to build wealth, you have to skim profits and put it into something, right? We'll probably get to that. But if you don't even know how much to skim, it's not going to happen at all. And so I'd love for you to break this down in a maybe more simple way and help the listeners understand how to read their damn P&L. As simple as that.
Yeah, I mean, first thing we always tell our clients is that your P&L is your X-ray, right? So just like if a patient walks into your office and basically says, "Oh, you know what? I know I've got I need to get a crown on tooth number 7. So can we just get to it? You know, like skip the X-ray, skip the hygiene thing. Can we just get to it?" And you're not gonna do that, right? And so the P&L is an X-ray of your practice. It is one of the reports you should be looking at when you try to understand your practice. P&L is not going to match the bank account, and that's where I think doctors are looking at bank account and say, "Oh, well, my bank account is light, but my P&L is showing I made a profit. My tax return is showing I owe money in taxes." Like, okay, everything is wrong, right? And so the P&L and the banks is not going to match because 95% of practices are going to have a loan. Right. So if the way we would basically first say is first you should have at least a simple dental chart of accounts. So with our clients, we set them up with a simple dental chart of accounts that's based on some specific key KPIs, right? Because you need to be able to, I run a CPA firm, so I have a CPA firm chart of accounts for my practice, and I'm looking at my numbers. There's certain things I'm looking at, such as labor, and so forth, so on, right? Which is, majority of our costs. So you have a dental chart of accounts. You need to make sure that you're working with a CPA that understands dental practices. And then you want to make sure your books are caught up. We still every year we'll get clients who've been in business for 10, 12 years that their books are a mess. Right.
Dude, so 30 years. It's a mess. It's like,
and it's because, and I don't blame them for this mentality, but for dentists and most doctors, the accountant and the bookkeeper is a cost center, right? It's overhead that you try to trim the most and everything. And when you start doing that, then it's same as I know most dentists will take offense to this because it's part of their industry. But if I say, hey, if a patient comes to them and says, "Hey, I've got to get 2 implants done, and you're quoting me, I don't know, $6,000. I can just go down to Mexico, and go to Cancun, have a nice vacation, and get some implants and all that done for 30% of the price." Well, you're going to get what you pay for, and the material over there, the hygiene over there, the health hazards over there are going to come back and bite you down the road, correct? And so same thing goes with bookkeepers and accountants. So that's that aspect of it. Now, what should you be looking at on your P&L? You should really have a good understanding of what are your lab costs and where are your supply costs and where should that be. Now, obviously, if you do a lot of implants, your supply cost is going to be higher. If you do more bread and butter dentistry, right, your supply cost is going to be lower. And you should be taking a look at your labor and how does that get broken out amongst the different types of positions that you have, and are they earning a profit for you or not, right?
Yeah.
Your desk should be basically keeping your schedule full, right? Your no-show rate should be very low. That's how they pay for themselves. So yes,
now you're speaking our language. I guess okay. So there's the key expenses, not to interrupt you, that you've got your key expenses that you're watching, just like we are. And that's great that you do that. Cause again, thousands of dentists out there probably aren't even doing that. But my thought is like the depreciation, the amortization, the interest, the personal expenses that they're running through. I find that's, to me, the biggest issue is they don't really understand how much money they're actually making if they don't go through the exercise of like, hey, these are fake expenses. Depreciation is a fake expense. It's something that we do so we don't have to pay taxes. But no little man in a little suit with a little clipboard says, "I'm the depreciation bill, please pay me." Doesn't happen. So that's money that you actually get to keep, but it's something that you do to help your doctors save on tax. But here they're looking at the P&L, seeing all these expenses that aren't real. And, you help them with that. I help them with that. folks, if you don't understand what is an actual real expense versus a not real expense, so that if you don't know that, call your CPA, call this amazing man who can walk you through it, because you got to figure out how much money you're actually making. And I just find that that's a huge discrepancy on the real world versus the tax world, the IRS world. So
yeah, there's really two ways to even look at it. One is the fact that you're looking at and trying to understand, okay, what did you really make, right? So we'll have those conversations during our planning meetings and say, okay, this is your real income. You know, when you back out depreciation, amortization, all that fun stuff, and what are called discretionary expenses. And then you go down the path of having a discussion. Is my practice really profitable? So you'll have doctors who'll basically be like, oh yeah, like I run a really good clean practice and I'm very profitable. And okay, well, because I earn 30%, take home.
yeah.
And then we're having a discussion of the fact that, okay, well, if I was gonna sell your practice, pay a doctor probably 30% of collections, and that means a practice earns zero. So you have zero. There's zero value behind the practice except for the build out and a percentage of the patient records, right?
Yep.
And so really, that we're trying to really understand the business profit of the practice, which should be basically after paying yourself what you would pay yourself if you had a 1099 associate, or if you hired an associate on a W-2, or on a percentage of collections agreement, or an adjusted production agreement, right? After that, the practice should be generating a certain profit. And by and large, because they're not fully managed the right way, they're not earning that profit. But the dentist goes through 10, 15, 20 years of your life really feeling the fact that, hey, I've got a great practice, I take home 30% of what I produce. But at the end of the day, if you were working at another office, that's the same thing you would take home. So if I tell individuals that, look, if you want to basically go to Hawaii for a year, and you basically hired an associate at 33% of adjusted production, and you left, and what would the P&L then look like? And it will be probably zero. Well, then do you have a business? Who's going to buy a business with zero EBITDA?
Yeah, I love that.
P&L is very important to truly gauge the success of your practice.
No, I love that. So there's like this level of like understanding how much money you made. And then there's a deeper level. If I could just summarize what you said, it's like there's a deeper level now on, okay, wait, so this is how much money I make, but like if I had to replace myself, how much is left?
Right.
And I would love for the listeners to get there. So once you understand how much money you got, good, do something with it. But the next step is really, how do I pay, how much money would be left if I had to pay a dentist, and look at that number. That's what people buy businesses on, and that's where valuations come from. And so folks, again, if you need some help, Omar, Paula, myself, we could all help you with that. Paula went through it pretty much twice in her career, selling 2 dental offices, and she learned that not the hard way, the right way, the good ways, and benefited her. So, all right. So with that being said, okay, now we got kind of like the basics out of the way. How much money did I make? And what do I do with this extra money? Now let's talk about what you walk your clients through from a wealth perspective. How do you help your clients with this wealth building idea concept? It's not just I'm chasing $1 million practice, but okay, now I made 400 on that. Now what? And so you kind of touched on this valuation of your dental office. I guess that's a part of this conversation, but like, where do you want to take this, Omar? And like, when you're helping people really build wealth for themselves?
So because most dentists are not obviously entrepreneurs, and they're not business, is not their first thought process, right? It's first kind of educating them, and that's what we do in our meeting, is trying to educate them on the business side of the practice, right? And then and part of that education, like I like to tell clients, is if I could look, by and large, in the United States of America, majority of wealth was created by individuals who started businesses, right?
Yeah.
It wasn't, you're gonna have very few people who basically work for Google and got a bunch of stock options, and they coded the crap out of, some program or whatever and stuff, right? It started by small businesses. So take a step back. Are you a business owner or do you have golden handcuffs? That's the first conversation. Typically, they're going to have golden handcuffs when we walk through the whole calculation of how much would you pay a dentist to be there. And then that's normally the first conversation. That's very a shocking factor, right? So then it's like, okay, holy cow, I thought I had a business and I guess I don't, okay? Then the conversation becomes, again, how do you start fine tuning that to basically get to a business level? Because again, the wealth discussion starts with you got to first have excess cash flow, which will be generated by your practice, which means you need to start looking at, things like, your treatment acceptance rate and your show up rate, and, revenue has to come through the door, and things have to be tightened up, right? In the practice, so the fact that now you're going from, 28% up to now 38% in total, cash, right? And then the delta of that is now your profit, and the rest of it is what you would pay yourself if you were working there as a regular dentist. And then once you have profit, then the second aspect of it comes. Well, profit comes, it's like a marriage. Profit comes with taxes, right? You can't leave one without the other, and then you start basically going into that discussion of tax planning and saying, okay, well now, let's talk about what is your vision, right? So as we as entrepreneurs know, to be successful, you need to have a vision and you have a goal, and you got to work backwards, right? Again, this isn't something that's taught in dental school. So the conversation then becomes, okay, do you want to own multiple offices? Then we're going to play a different game, all right? Or do you basically, are you the person that's like, hey, I want to have one very good office. If I want to make this much, my spouse already makes X amount. We're totally happy with that, and we want to basically be there with our kids and so forth, right? Or I want to build a crazy empire of whatever, 20 offices. So you can't, I'm sure you guys will appreciate the irony, but you can't go and develop a treatment plan until you know what the patient's diagnosis is and what they want to do. So if someone wants to have multiple offices, then you're going to play the depreciation game, the rollover game, where you keep taking the write off from this office and play against that office, and and you that's how you play that game, right? And so there's not going to be a lot of discussion around, okay, investing in other things and conserving that cash for that, right? You're basically just trying to build multiple offices and get past that break-even point where cash finally starts leveling out. Versus the individual that basically says, hey, I want to have one really good office, and I want to have an associate there. I just want to be there about maybe 3 days a week, right? And then I want to have an associate there 2 days a week, and then maybe just some nights or emergency cases. And I'm really good with that. So I'm going to take my percentage of collections. I'm going to take up the profit that I make on the associate, and we're good. And if that's the scenario, then we start talking about, okay, now we're not financial advisors. I mean, it's very clear. We don't sell securities. We don't sell, any of that, nor are we, selling real estate or any of those kind of things. But we start getting in and think about it. Okay, so now you've optimized your practice, right? So your ratios are good, your numbers are good, your KPIs are good. Awesome. Now I've got excess cash flow. Crap, the IRS is knocking on my door. And you start, try to mitigate that. And that's where you start finding 40, 50, 60K in tax savings, right? Based on what you start stacking up deductions. Now I've saved that 60K. Now that's going to be your highest ROI that you can get in any kind of investment, is not paying IRS, right? You think about the investment world. I'm a real estate investor myself. We directly invest in real estate. So I know the fact that if I invest in a piece of property that's commercial, it's going to make me 7%, right? If I invest in the S&P 500, like Warren Buffett says, over the course of 10 years, it'll be 10%, right? If I can find tax savings and deductions, right, that gives me a 25, 35% return on what I invested, correct? At normal tax rates. So it's a ridiculously, that should be your second bucket you should fill. First, make your practice optimized. Second is the depreciation.
Now, Omar, real quick, I want you to keep going down this path, but the savings would only be real if they've actually saved money over the course of the 12 months, right? So they're walking into the big tax day and they're expecting a bill of $100,000. And you're telling them, no, actually it's only going to be 60. So now you have 40 grand.
Well, I got to correct you on that, because typically you can't do tax planning on April 15th. Typically, like for example, right now, we're deep into tax planning meetings right now, and we schedule all of our clients between August 1st and September 30th. And it's busy as heck around here right now, but every associate's having 2, 3, 4 meetings a day. And
thanks for being on the podcast today.
Yeah, thank you. But this is a time where we're really digging into and saying, hey, here's how much money we think you're going to make. Here's your options. What do you want to do? Not on April 15th, because by then you've already the books are closed, right?
And that's the difference between not a good accountant and a good accountant, is helping you throughout the year, not just having that discussion on April 15th. I love that. So here you are, tax planning mid-year.
Or even better, they just file an extension and then you have it. You have it later.
Yeah, exactly. So here you are. Exactly, Paula. Here you are, mid-year tax planning. Help me see where you're getting that 40 grand to go invest. Because you're right. There's nothing better. Can't invest in something to get an immediate 40 grand to do something with. So
a lot of it is going to be structuring, right? We'd be surprised at how many dentists don't have the right structure in place. If you're a partnership, but you set it yourself up as an S corporation, that's a problem, right? If you're a startup, right? And then you didn't elect S corporation on the first when you first opened versus a year later. Now you got to carry over capital gains and everything. I'm getting into nitty gritty, right? Stacking deduction. So with the Trump bill, there's something called a 198 deduction. It's called basically free money if you are within a certain income threshold. Oh shoot, you just missed the threshold by 40K. Now that free money is gone. Well, how do you find 40K of deductions that we can pull from here, pull from there, retirement contributions, blah, blah, blah. And now that all of a sudden starts stacking up deductions, and all of a sudden now the 40K gets unlocked, right? And from the 198 deduction, which wasn't there before, but it just unlocking different things by looking at how you're structured from a legal standpoint, from a tax standpoint. How close are you to certain thresholds where you can unlock free money? And then how do we get you that threshold? Now, if you're 200K off, then it's going to be tough unless you're opening a second office by December 31st. But if you're 40K off, there's typically things you can do to get down to that 40K. And all of a sudden, that 40K unlocks another 40K of free money, but now you're 80K, right?
Totally.
Yeah. But we tell every client just like you're, as a doctor, every case is going to be different for you, right? For us, every patient, which is every dental practice, is a unique case, and that's why we need to understand, where do you want to go, what's your end game, and then based off that, then we can do a treatment plan. In some scenarios, we may tell you the fact that, look, I know you're going to hate hearing this, same as a patient was going to hate hearing the fact that you need to get an extraction, but we have to tell you the fact that it's probably better you pay more taxes this year. And I'm like, what? Why? Well, because I'd rather you pay the tax and keep $75 and pay the IRS $25 and have that cash, because you've told me you want to start an office in March of next year. You've got a bridge loan of this much, but it's going to take you 6 months to ramp up. I'm worried you're going to run out of cash.
Yeah.
And that's going to basically make you start making some bad decisions, because the reason the rich continue to make good decisions is because they're not blinded by fear and anxiety, right? What do most rich people do? If you look at most investors and entrepreneurs and CEOs and everything, they've got 6 to 9 months of cash sitting somewhere stashed away. And that way, if something happens bad in their business, right? Mm-hmm. They're not making poor decisions. For example, if I have anxiety and I'm gonna and I just hit a cash flow wall, right? I've got $1,000 left in the bank. You start chopping heads. Well, these people, no, but you're a people business. You're a people business, and you spend time training these people, and these people are able in a right environment. And you screwed up the marketing. Sorry, right? You screwed up the patient flow, and now your collections are down. But because you have the anxiety and you don't have extra cash, you start making bad decisions. So if you look at every business story down the pipeline, people make bad decisions when they start using emotions over intellect. The emotions come into play when you don't have the right amount of cash. If you look at all the entrepreneurs who have, even during worst scenarios, have elevated, right? It's because they've built in enough cash that they're not worried about it. So that discussion we would have with them and say, look, I don't want you to make bad decisions. I hate to tell you this, but look, I'd rather you pay the IRS 25 cents to keep keep 75 cents in the bank, and and that way we can get through this next year, right?
Okay. I love that. I love that. So, okay, so we've identified, how much, figuring out how much money you have. Then we went to, okay, now we've got money. Let's figure out some strategies to invest that money or do something with that money by tax strategy. Let's fly this bird home now on what do we do with that money? That's great. So now we have an extra 40 grand because Omar just unlocked a bunch of amazing Donald Trump tax code stuff that nobody really understands. And now we're sitting on cash. So now we're sitting on something to do with. And by the way, the next episode that we're going to have today is all about the benefits of ownership. We were literally talking about that right now. Right now. This is literally what Omar is going to discuss is like, if you're not an owner, you don't get this benefit that we're about to talk about. You're just a W-2 throwing in payroll tax, and hopefully you're planning a little bit to put in your little 401k every month and the company's matching. Yay. No, we're talking about bigger things right now, which is the extra of being an owner. So now Omar, how do we land this bird? What are some ideas and things that you recommend to help doctors maybe take their PFS, their personal financial statement, to the next level, their net worth to the next level? What are some things that you would suggest doing with that extra money? You said you were into real estate. What else? Like what is your thing?
So it's I don't like making things complicated, right? So I kind of just go off of like, the most people, unless you're like a serial entrepreneur, are gonna be doing well on a three-legged stool, right? Investing in real estate directly or indirectly, having real estate exposure, having exposure to the greater index of all U.S. companies, right? So S&P 500 or something, and then the third is the value of your practice increasing, and then making continuous improvements to your practice through some of the. So it's, again, if I'm going to invest $1, the first place I would invest is my practice, where I can bring in the right consultants, bring in the right machinery, bring in the right equipment, bring in the right marketing team, whatever, right? To then, because if you start really looking at this, again, if you start looking at ROI of it, whether if it's a CPA firm or it's a consultant or it's a CBCT or whatever, and you start saying, okay, well, shoot, the market's going to give me 10. That's pretty awesome. But, my practice generates a 25% EBITDA. That means every dollar I put into it is 25%. I'm going to get out of that. So then how do we fine tune that? And how do you fine tune the value of my practice? And what else do I invest in my practice? And so this is not being a serial entrepreneur. Like if you're a serial entrepreneur, that you're going to open up 7, 8 other offices, you're going to open a dental billing company and dental this, and then you're going to start partnering with your buddy on a lab, out of Singapore or something like that, right? And and that's a serial entrepreneur. That's pretty cool, right? But that's not what most people are. And so, but our when we talk about building wealth, it doesn't mean the fact that being a multi-billionaire. How do you define wealth? Wealth is being able to have freedom, right? So if you can solely over time be disciplined about investing in things outside of your practice, and over time that eventually generates maybe 35 or 40% of your take-home income. Now you diversified yourself, and you have wealth. Your practices are worth more, right? And if you can, reinvest that money, into the practice in a way where you have less chair days, that's wealth, right? So turning your practice into an asset, and so it's really quite simple. Again, we're not investment, advisors, or we don't sell investment doing that. It's just more trying people getting to understand the fact that your practice, when fine tuned the right way, it's almost like you have a control panel, right? And you're in front of a big machine. If I turn collections this way, and if I move the treatment acceptance rate by 4% here, and if I start basically fine tuning marketing by this much and start really understanding what's the cost of getting a person to a chair, and what's my reappointment rate, right? And what's how many active patients do I have versus non-active patients? I'm looking at that number, and what is the treatment dollars per visit, right? and you start trying to do this, it turns into a wealth making machine because a dental practice, especially if it's healthy and doing whatever, 1 million, 1.2 and more on 5 chairs. When you start moving things 5%, what is 5% of $1 million?
Mm-hmm.
Right?
Mm-hmm. I like what you're saying, because here I'm thinking you're about to like unlock some amazing, like maybe some stuff that a financial advisor would say. And instead, I love this. You're pivoting back to, well, why don't you put it back into your own business, grow that business and sell it for a lot more? And that's going to have a way higher return than what Warren Buffett can do in Coca-Cola. He's big into Coke, if you didn't know that. So like, sure, we're going to get that amazing Coca-Cola distribution every quarter, and it's going to be slow growth over the next 20 years. That sounds great. But what if we did the milling machine, the Invisalign unlock or clear liner unlock? Or what if we did the whatever the hell, and people are printing teeth in office now and doing guides and printing it right in office. It's soon going to be off the chair. That's going to be nuts. But like doing things, and now we're talking Paula's whole world of, okay, why don't you just invest in your own company and sell your company for a lot more money and get a huge percent? So I love that, Omar. I think that's really good advice, because if you chase some real estate play, if you chase some investment, I think dentists forget that they're sitting on a cash cow business, and they go and think, well, I'm going to go. I actually had a client buy an ice cream parlor, and he thought it was like the world's best idea to take all of his extra money and put up a little parlor on his property of the dental office off the road. And he thought that was going to make him a ton of money. And I'm like, hey, that sounds
because
cool.
They were going to get cavities and come back to him.
Well said, Paula. No, but maybe that's the mad genius. But guess what? That thing didn't make any money. It was stupid. He put $100,000 into the stupid little building or whatever. And I'm just like, dude, you could have probably.
If you really start studying entrepreneurs that are successful, right, you'll find something that's very, very common. They are highly focused on doing one thing that made them make them very wealthy. Once they accumulate that wealth, then yeah, I mean, I'm still saying, invest in some real estate, but
diversity.
maybe not directly. There's so many real estate funds out there. You got Vanguard real estate funds. If you may know, private equity funds are investing in shopping centers, and you can own like 1% of that shopping center. That way, you're not taking all that risk, right? You may be an LP in 10 different deals, and you're very well diversified, right? There's just a lot of ways to do it. But if you look at the billionaires and if you look at the millionaires, no one really got there by basically going and being the best at 7, 8 different things. They're good at one really good thing. There was an interview of that Jimmy John's, guy who exited Jimmy John's, right? And they're like, so we want to ask you, like you sold for billions, right? So what did you do? And he's like, shoot, I know 2 things in life. I know sandwiches and farmland. And so I already sold the sandwich thing. So I bought a crap load of farmland, and I know it's really low returns, but it's safe. And I'm basically like the world can end tomorrow, but I'm getting my 5-7% on that land yield and everything. I'm good, right? So you focus on the one thing that you get. If you're a dentist, your highest ROI is going to come from your practice. Reinvest in that practice to make it into a business. We have a lot of clients that we've seen over the years that have turned their practice, a 6-7 hour practice, into a $1.5-1.7 million practice. They're working 2 days a week. They've got 2 or 3 associates coming in, right? They've got the lifestyle that they want. They're earning very good money. They're taking that money, investing in, mutual funds, real estate and deals, so forth. And that's earning them. If you start thinking in math, right? If a dentist saves $100,000 a year over 10 years, that's $1 million. Even if you put that into the most safest investments, which is your mutual funds and your real estate, limited partner plays, and that's 7-8% a year. You're now generating, $80,000 a year without doing anything, right? Totally. And most of them need about $200,000 a year to break even on their life expenses outside of the student loans, right? I'm talking about your mortgage, your kids' tuition, this, that, all that stuff, right? So that's how I'm saying that. How do you get to the 50%? Now you're generating income outside of your practice that's covering half your family's income.
Yeah, I love
It's very
that.
simple. You said there's no crazy, formula that I'm putting out here. It's really more about ideology, but 99% of business owners or practitioners, whoever, miss the target because there's flashing lights everywhere and you get distracted and you really only have 20-25 years of real good production life. And then half of that time you're kind of diverted and all that. So it's a time game, right?
I love that. Yeah, I love that.
And then you reallocate assets somewhere else. Now your practice is earning you 300K, but now your other investments are earning you 100K, right? 450K, and that's a very comfortable place for a dentist to be versus where they are today.
I love that, man. I think that's a great place to land the bird. People usually take about 20 minutes to get to work, so we're about 15 minutes past due. But I think that point, keep it simple, reinvest in yourself, figure out how to grow your business, because it's the best thing to do is just bet on yourself and invest in yourself, because that return is going to be a lot more than Coca-Cola. And I think that's solid, Omar. I really appreciate it. And obviously, we believe in as consultants. There's so much opportunity to do within an office. I always find it fascinating, and I promise I'll end on this, is that like a lot of our clients buy practices. They hire us to help them fix all of the fires. Fire here, put out, fire here, put out. These are dental transitions. It's like you take over and it's like, holy shit, there's fires all over the place. Once we put them all out, they're like, hey, I think I got it. We're good. Thanks so much. Next level. You help us fix. I'm like, dude, we have been so reactionary to putting these fires out. Now let's work on getting.
We didn't get to work on the good stuff.
we didn't get to take this thing to another level. We just helped you get it to co-pilot. But I think reinvesting in consulting and marketing and technology, all the things, focusing, always getting better, drop insurance. There's 100 different strategies to grow that EBITDA number, to grow the top line and the bottom line. Love it. It's great advice. I appreciate your time. Guys, if you're looking for a good consultant, someone that, not consultant, sorry. Well, consultant, sure, us. Yeah, we'd love to have you. But this was more about Omar. If you're looking for someone with good strategies on tax, great consulting as far as focus and strategy, I think Omar's firm is a good place to land. So check out those details below, and please reach out to him. And like I said, thanks always for subscribing, liking, all the things. We really appreciate you being part of the Dental Unscripted family. So until next time, Omar, thank you so much for your time. Paula, glad you didn't fall asleep on us today. And we will talk next time. Thanks, everyone. Have a great day. Bye-bye.
Thanks for listening. Let us know how you like the show. Rate us on Apple and Spotify. Subscribe and follow for more.